Hi there. Despite ongoing changes in the world's second largest economy, China continues to prosper and growth reached 6.3% in the first half of 2019. As China's trade rises, especially with the major trading partners other than the United States, how will that affect the world's economy, with many countries suffering from global trade tensions? What are the challenges and potential in China's continuing transformation and further opening up? And how will China position itself as it tries to stimulate a more dynamic global economic pattern? To discuss these issues and more, I'm happy to be joined in the studio by Professor Jiang Gong from the University of International Business and Economics, and Andy Mork, Senior Research Fellow with the Center for China and Globalization. We shall also talk to Robert Cab, Director of the Economist Corporate Network in Hong Kong via satellite. That's our topic. This is Dialogue. I'm Yang Ray. Welcome to our discussion here, gentlemen. First, Andy, are you surprised that our economic growth has slowed to the unprecedented position since perhaps 30 years ago?
Not at all, Yang Ray, because we need to understand that GDP is a targeted number in China, and the government announced early on that the range for this year will be 6 to 6.5%. So 6.3% for the first half is right in the middle of that range. So I think not surprising at all.
John?
I think it represents the overall trend. I mean, China's economy is growing so big, so large, that it's very difficult. It's actually not realistic to maintain the same kind of growth rates that we've been seeing, a decade ago, 2 decades ago. This kind of growth rates are behind us forever. So, China's economy is transitioning more towards sort of like a developed economy, where you have, 3-4% growth rate is a phenomenon for developed economy.
So I think 6.3% remains the fastest growing.
Yeah, I mean, I also want to point out that 6.3% is one of the fastest growing economies in the world, especially for such a large economy. So it's actually not bad at all. I don't think it's so bad news. It's quite reasonable, and I think it's quite expected, as you pointed out.
One of the biggest economies, India, also slowed down. Let me go over to Robert Cab. Hello. I'd like to have your thoughts on the slow growth of the Chinese economy. Do you think this is a big surprise, or you have long expected the second largest economy to grow within a reasonable range of expectations, or stabilization? Because the central authorities of the Chinese government emphasize over and over the importance, for example, of stabilizing the economy in 6 areas, 6稳 in Chinese. I'd like to have your analysis.
Well, I agree with what was previously said, that the growth rate is in line with expectations, not only inside China, but observers outside of China as well. I guess, though, what is surprising is the way in which this growth has been achieved despite a lot of stimulus measures being taken. Now, China's been forced into a position where it's responding to pressures from the United States, and there's disruption to the global supply chain. So, yes, it's a good headline number in terms of growth, but I think there's some surprise going on in terms of not having more growth given the stimulus measures that were taken in response to the trade headwinds.
There's obviously a lot of uncertainty in the Chinese economy. Andy and John, what are your major concerns about the sustainability of this economy?
Well, I think that's the question on everyone's mind today. One thing I want to point out, too, though, about China's 6.2, 6.3% growth, people, consumers, businesses don't buy things in percentage terms. They buy things with RMB or dollars. And from that perspective, China's added something like $800 billion of economic output to global growth. And that's the equivalent of a Switzerland, a Turkey, or 2 Nigerias. And that's actually much larger than, say, the amount that the U.S. has added. So that being said, I think the biggest concern, of course, is not just maintaining an appropriate economic growth rate, which, as the government has announced, for the year would be 6 to 6.5%. But I think the distribution of that growth is very important as well, because we do see that in Tier 1 cities, clearly, the level of economic development in China is at a certain level. Other parts of China have a little bit of catching up to do. So I think, to me, that's one of the areas to focus on.
John, let's take a closer look at the 6 factors that may prove to be uncertain. For example, unemployment. Premier Li Keqiang said in his government work report at the opening ceremony of the NPC in March that the government needs to provide up to 10 million jobs. Do you think we're going to live up to that expectation?
I was just about to mention unemployment, actually, but you are one step ahead of me. I think unemployment is a real concern from 2 perspectives. One is that unemployment is going to be a problem in the wake of technological changes. We are seeing more and more usages of robotics, AI technologies, and these things are replacing jobs. These things are replacing jobs, no doubt about that. We're seeing more and more, factories using, robotics instead of human beings to do manual work, for example. So this is happening in spite of this trade tension with the United States. The second concern is with respect to the trade tension. That's because, I think even though we don't have solid statistics, but I do have a lot of concern about foreign companies operating in China, especially American companies operating in China, are in the process, at least planning to move out of China. And this is also in addition to this broader and larger context that manufacturing is indeed starting to migrating away from China into other developing countries. In spite of this trade tensions, it's already happening. This underlying economic forces are already at work. So, all these forces combined seems to be like a perfect storm forming right now, and I have a lot of concern for unemployment. And I think the government needs to do something about this.
Many observers, Robert, the Chinese and alike, would study what the uncertainty and unpredictability of the Chinese economy would be like against the broad backdrop of urbanization. For example, it seems authorities in small and medium-sized cities in China are relaxing their grip on the hukou system, or the household registration system, in the hope of attracting more university graduates. And do you think we're going to see a stronger flow of labor forces, educated and skilled labor forces from the more prosperous and major urban areas to the small and medium-sized cities? And we're going to see the beginning of a tidal wave. For example, labor-intensive manufacturing factories will be relocated from first and second-tier cities to the small cities.
Yeah, I think generally that's certainly possible. In terms of manufacturing migration, yes, definitely. In terms of talent migration, it's a little trickier. So the Northeast in China has been suffering from a decrease in population. It's the Southeast, particularly where I sit in Hong Kong, the Greater Bay Area as it's become to be known. But even without the role of Hong Kong involved in that, simply the momentum behind Shenzhen, Guangzhou, you also have Greater Shanghai, the Yangtze Delta River area. And then you have areas like Chengdu and Chongqing and Sichuan, which are also attracting people. They're providing higher value job opportunities, and it's easy to pull people away from cities that, like you were mentioning, don't have as accommodative, let's say, residence allocations. So any of the smaller cities, like I mentioned, Greater Bay Area, it's not just the big cities such as Shenzhen, but the many smaller cities around those anchor cities that could be riding that wave of these more developed urban areas for attracting talent. But it is a delicate balance because you have to offer the right jobs and the right lifestyle. So yeah, both phenomena, both in manufacturing and talent, are going on, but it's a delicate balance to get the right mix of attractive factors.
You're talking about the change of lifestyle, which is, of course, an important part of the catalyst that will trigger the next wave of economic growth. But I'm afraid the 9 cities, which are an important part of the Grand Bay Area that involves Hong Kong and Macau, will be a nice exception if you look at the underdevelopment and underperformance of other cities, small and medium, like in the underdeveloped remote areas. But Andy, we see the Chinese equivalent of Rust Belt, meaning shrinking cities at this moment of the Chinese economy. What do you think of preferential policies rolled out by local authorities to attract university graduates? So we are talking about the proposed elimination of the household registration system. Do you think this kind of policy options are likely to work?
Well, I think they're one piece of the puzzle, Yang Rui, but in and of themselves, I don't think that they will be sufficient. One thing to point out, too, about this more balanced economic growth, that if we look at some of these rising cities, these so-called cities in the trillion RMB club, Changsha, some of these other cities that are growing very quickly, it's not just about domestic policies, but also their linkages as global engines of growth. So, for example, we see in Changsha partnerships with Germany for Industry 4.0 to create new jobs in autonomous driving, other types of IoT applications. So I think that that has to be a part of it. So it's not just these little bit more narrow but necessary reform measures, but I think they do have to be linked to economic drivers that have global scope.
Many point out, John, that the prospects of a small and medium-sized enterprises, or the most important part of the private economy, largely depend on how to reform the SOE. Having said this, let's look at the second major factor that may affect the Chinese economic stability, financial stability. Do you think we're going to run the systematic financial risks? What are the major challenges that central authorities are facing in undertaking such reforms to ensure financial stability?
Yeah, well, this industry has been going too wild, in my opinion. It's been going too fast, going out of its control, and I do see risks associated with that industry. I think at least the regulatory authorities, the financial sector, hasn't done a very good job in terms of controlling, the wild spread of those unscrupulous and sort of very risky fundraising schemes to the public, and it's quite dangerous. And having said that, I also want to, I don't want to I want to badmouth the importance of financial engineering or financial innovation, but it reminds me of Winston Churchill's very famous saying, right? He once said that I'd rather be more content with, or rather the Britain has, the industry more content than, what is that, the financial sector being more comfortable or something like that. I mean, in other words, he's saying that the industry is more important than finance, so you don't want to have the financial sector to be getting ahead of yourself. Now, I also want to get to the point of the shrinkage of the sort of a third, fourth tier cities. I think there's very limited the government can do here, because economic forces in sort of this regional economics are itself a work. It's always been this agglomeration force versus dispersion forces. Sometimes one is more dominant than the other, and that's actually the U.S. experience is very much to be worth of study here. The United States also has this problem. You have this economic activities concentrated in cities, right, for a while, and then start people to leave the cities, desert the downtown area, move into the suburbs. Now you are seeing, as the economy becoming more service-oriented, you see more people going back to downtown area. So I think there's sort of a battle between the suburban area, the third tier, fourth tier cities, and the major cities, always sort of going back and forth. Now, I think in terms of helping those communities out there, what the government can do is to, try to locate those sort of government-sponsored projects, research projects, for example, public expenditures, sort of preferentially in those third or fourth tier cities, so as to create some more central government-sponsored jobs, in terms of attracting investment, in terms of providing all these kind of preferential policies to attract investment. It's a very tough battle to conquer. It's kind of a difficult.
Robert,
fight.
it seems that John is critical of the shadow banking and the financial risks in the services industry. Now, do you agree that while China moves quietly from a low value-added manufacturing industry to service-oriented growth, we're going to face more risks because we're talking about the financial stability, and with the burst bubbles in P2P and the collapse of some of the fundraising financial institutions, we're going to have more of such uncertainty.
Well, yes. I mean, as a basic answer, it seems unfortunately there is increased debt leverage. And that is creating bubble-like effects within the economy. I know the government positively is aware of this, so that's the good news. But the bad news is these things are very hard to control even when you're aware of them. So I would say that is one of the bigger areas for concern, that although the economy does continue to grow at a surprisingly high growth rate given the size of the Chinese economy, you also see this swelling amount of debt. And a lot of it isn't very transparent, and particularly at the local government level. So you were mentioning there about various cities. It tends to be those third and fourth tier cities with less solid economic fundamentals that are borrowing the most, and that's where you could see some financial disruption coming forward.
Robert, President Trump tweeted a message and expressed his happiness about the slowest economic growth in China in a bid to win his electorate in the coming elections. However, contrarily, many Chinese observers have noticed the recent surge in FDI, foreign direct investment, as well as trade with other major partners such as ASEAN, which has surpassed the United States to become our first and most important trading bloc. What do you think of this positive side of our growth?
Well, that's an interesting outcome of the trade war, that both for reasons we heard some discussion of previously, you see these supply chains moving out of China, but that's not all bad news for China. If China can continue to be part of the supply chain more in services, design, planning, these areas, or indeed if some of these supply chains are coming from Chinese brands, then China is still reaping the economic benefits. It's just moving to places like you mentioned, ASEAN. And then the other component of that is following those supply chain moves and along with China trying to increase its economic standing in the rest of the world vis-a-vis these difficulties with the U.S. as it opens up itself for more foreign direct investment. Other countries and China will benefit from that. So it's a very interesting time. While we have a lot of negative fallout that comes directly between the U.S. and China in this trade war, peripheral countries stand to benefit. And if China plays its cards right, it can also benefit from that transfer of both supply chains as well as the new FDI coming from other sources.
By the way, economists and policymakers have recently been talking about the use of Libra, and that's a major digital currency to be employed by Facebook. That's said to be a blessing for those in underdeveloped countries, which people there find it very difficult to enjoy better global financial services. Having said this, John and Andy, what do you think of the impact of having recent surge in our foreign trade as well as foreign direct investment?
Well, I think they clearly show the strength and the resilience of the Chinese economy. And I think, President Trump's remark is very much to be expected because, first of all, this president tends to conduct his diplomacy and his negotiations very much in public and especially on Twitter. So in the U.S. we might call this a little bit of trash talking. So we want to say something negative about our opponent in the hopes to, one, maybe undermine their confidence, their commitment to their position. So I think that's not too surprising. On the other hand, there clearly is a rebalancing going on, meaning that especially the BRI countries, the Belt and Road countries, are all growing at relatively high rates. I mean, China, again, as we talked about, 6.5%, adding significant amounts of real output every year. We look at countries like Russia, so because the Russia-China relationship is becoming increasingly important from an economic perspective because Russia is now China's top supplier of oil, of course a critical natural resource for the continued growth of the Chinese economy. So when we look at these structural changes, I think that it's not surprising at all that there is more investment, foreign investment coming into China. One thing I want to talk about too and just briefly touch on is the issue of financial stability. So we're in a very, very strange global environment where we have interest rates so low and even some European junk bonds with negative yields, meaning that a company is charging you to lend money to them. So this, of course, has an impact on global financial stability. And I think this is where China's system of being more controlled, so not succumbing to this free market ideology, where it's free capital flows at all costs, but being able to balance these different priorities, I think is serving it in very, very good stead. And foreign investors are seeing this as a positive sign, and part of the attraction, I think, of investing in China is because of this, and in particular, financial markets, whether that's equity or debt, that this is, I think, one of the big drivers attracting foreign investment in China.
Along with the
today.
Federal Reserve, John, the PBOC also agrees to lower its interest rates as part of perhaps a reserve ratio requirement to hopefully stimulate the flow of cash in the market. Now, having said this, what do you think of the incentives and the driving forces behind the rise in FDI and foreign trade?
I think most important thing is that such a large market, we're the world's largest consumer market. So foreign companies still see this as a very attractive place for investment, and it's keep growing. The Chinese consumers' purchasing power is something that foreign companies were going after. And in addition,
are you suggesting quietly that we have this sizable domestic market for the rapidly growing middle class?
Well, we already have a very large middle class, and I think this middle class is keep expanding. The purchasing power of this huge market is going to be very impressive, and so I think foreign companies still, even aside from all the other negative impacts, for example, rising labor costs, rising factor prices, high tariffs on Chinese economy. If you are targeting a domestic market here in China, it's still a very attractive place compared to other places. I mean, you don't see many places seeing this kind of growth around the world. I mean, America is mediocre growth. European is almost no growth. Japan is negative growth. So this is still a very attractive place, and also due to its stability, its currency stability, it's still a very attractive place. And I want to also mention about the trade. Talk about the trade. I think the fundamental economic force is that the world's economic epicenter is moving. It's moving to Asia. We used to have this sort of a North Pacific trading network, this global value chain sort of straddle along the Pacific Ocean. You have China, South Korea, Taiwan, Japan on this side, and Canada, Mexico, United States on the other side. And the trade has been going like crazy. The freight rates are so competitive. But now I think this great picture is probably starting to change. We're seeing the center of trade, center of world economic activities are shifting to Asia. Especially the ASEAN countries. These are very large countries in terms of population. Indonesia, right? Over 100 million people. Malaysia, huge markets. Philippines, very large markets. Vietnam. So these are, very large economies in terms of population size. And I think we're starting to see more and more economic activities in what I call the Indo-Pacific Rim. I mean, this is an area where we're starting to see more and more economic activities as well as trade. And China plays a pivotal role, a quite centric role in that trading network.
Let me go back to John, Robert, sorry. Another major concern of foreign observers who follow the economic growth in China would point out, look, they are really worried whether there's going to be a spillover of trade war into the domain of financial war, because after all, U.S. dollar account for most of the global trade transactions, and if that's going to be triggered, it'll be a major disaster for China and the rest of the world. There will be a lot of consequences for the United States at the same time. But do you share this concern?
Well, in terms of finance, I mean, the topics that come up most in relation to the trade war is the possibility that China would certainly devaluate the renminbi, and the other that there's a negative fallout for American financial institutions. To the first part, it doesn't seem like there's any indication China will abandon what's called a managed currency, meaning it doesn't want to see the renminbi significantly depreciate or appreciate, which keeps things on a more even keel despite the trade frictions. Where there's a little more concern that I'm hearing from financial institutions, it's U.S. financial institutions who feel they will be victimized because in this tit-for-tat, back and forth you hurt me, I hurt you dynamic of the trade war, American institutions are ripe for being targeted versus the European and other Asian financial institutions that as China reforms its markets and opens them up, that these other financial groups will be able to access the Chinese market and the U.S. group shut out to a certain degree. However, I think that's maybe slightly exaggerated in that Wall Street really leads, not across the board, but in significant ways with a lot of the financial services. So I think as China is serious about reforming its financial sector, it's going to end up working with the American companies in some way. But we'll have to see. That is a concern I hear.
Very quickly, Robert, with the return of the economic sanctions against Iran, Europeans feel that they're going to be subject to the impact and therefore the establishment of their own SWIFT version. Having said that, do you think in the near future the three major economies in Northeast Asia, Japan, South Korea, and China, are likely to resume the idea of what Yukio Hatoyama, former Japanese Prime Minister, stood for, pushing for regional economic integration by adopting the Asian dollar? Because the three heads of state from the three countries are likely to meet this year to discuss further economic integration or regional integration in Northeast Asia. What do you think?
The kind of Northeast Asia integration is certainly interesting. It has a lot of compelling economic reasons. I would bet, though, that you're going to see more progress with RCEP, which is broader across Asia. One of the issues you have in North Asia is historical differences, and currently Japan and Korea are fighting about various matters, and they have their own little mini trade war going on. But the potential for that, a Northeast Asia trade alliance, is very possible and has economic basis.
Very quickly, Andy and John, what are expectations for the Chinese economy in the near future, before we conclude the discussion?
Well, I think a stable path is the most likely outcome. So, if we look at past history, I think the Chinese government has demonstrated its ability to manage the economy. And of course, the principles in which it manages it is different from the U.S., and that creates, I think, some confusion and some angst. But I think staying the course, higher quality growth, focus on more balanced development is what my expectation would be.
Through more of innovation and productivity. What do you think, John?
For the rest of the year, I'm actually quite concerned. I'm not very optimistic for the rest of the year. I think what I'm guessing is that the growth rates will keep slowing down, quite slightly, by the way. I think, first quarter we're talking about 6.4, second quarter we're talking about 4 and 6.2, and now the average 6.3. It's probably going to be even smaller growth numbers for the rest of the year.
Thank you very much. We talk about facts and figures, but not fiction. Hope we can have a soft landing. Until next time, goodbye.